Okay, this a second video about rate cut, what happened and what I think to expect, and why suddenly it's not exactly as expected, but now it's going actually not bad. So what happened, this one I have charts, I have 3 charts. Actually I'm finding it's very helpful to use the dollar index. This one, dollar index, is always in talks of different news people, business news people, or currency people, professional people on Wall Street or anywhere else. So at the time of news of rate cut, basically this is dollar index, right? It was going up, and it was expected to drop, and because, like I said, normally when they cut the rate, it's actually supposed to go down. Dollar should be going down, but what happened at the time of news, it didn't go down. Actually at some point it went up. So this move, this dollar index that was going up, basically that move basically made even more move till some point. Okay, some people might call it false breakout. I actually believe it is a false breakout. Normally if this is higher, it's expected to see in the future going up, but I've seen in the past from my trading it's not always the case. It can go up and then have a huge drop. So what makes that up, I'm not sure. It could be purchase of bonds, it could be something else, but I've seen from the news the Japanese were purchasing American bonds, a lot of them, and I think they have like certain $1 billion invested into bonds. Well, anyway, so what happened, basically on that rate cut news, it went up like this, okay, and then everybody was thinking, oh, it's gonna keep going up and up and up. No, you see this red bar, this one, I'm talking about the first chart, okay. So this red bar, you see, go down. Then we have second one, and pro traders, they do look at that second inside bar, you see, goes down. Now basically that rate cut effect happened later, not right on the news, but what I've seen is actually happened second day, when after that big move up, actually from that point started to go down, and that going down right now, it's still going down to me. When I found for myself, actually it's very helpful to look at dollar index, which is like this DXI, to look at dollar index and relate to euro. So because euro actually consider it as like approximately half of whatever on the other side of the dollar. So euro is kind of correlated. I see quite a big correlation. So if that dollar index going up, euro is going down. Okay. While looking at Swiss, the third chart is I have Swiss, right? This Swiss chart, for some reason, it's not exactly as European, but I would say if what, like looking back at first one, if dollar index go up, then euro drops down. You see how it goes. It means euro drop down, the same as dollar go up. So dollar index and euro, for me, in some sense, it's easier to see for myself the movement, what to expect. So if somebody is talking about this one as support or this one support, then I would correlate basically either this one go back up to here or up to here. For me, it's kind of easier to kind of project the future support resistance. So when it comes to what they call it, Swiss franc, that's kind of a little bit different story. It's the same daily chart. You see Swiss franc, okay, and we have the same for euro. Now, based on moving average, actually euro here is below moving average, but this one quite strongly above moving average. So Swiss franc is not exactly going like euro. If dollar index is above moving average, it can be Swiss franc going the same above moving average. So it's not exactly, but euro, I would say, more kind of reflection of dollar. If this go above moving average, this go below. If that goes up, euro go down. If this go down, euro go up. So for me, if I don't see anything like say on euro, where euro might go, for me like a cheat sheet, I consider that as a cheat sheet. For me, I look at dollar index, and it's kind of telling me something. So now at this point, many people would think I need to short. I would actually consider to buy. Up to what point? I don't know, maybe up to here. I would buy, maybe taking profit here, maybe profit zone. So, or maybe even here. Because of rate cut, Europe didn't cut the rate, so the movement could be even bigger up than here. It could be, like, suppose this was for the first chart. The bottom is I would say the bottom, the first chart, this one, bars. So that's for dollar index, and I would look at this level on euro on the top of this one. That would be probably from here to go up to here. That's what I would think to trade, to enter here. That's my would be profit target here. Now when it comes to Swiss franc, I don't know, for me sometimes when I look at Swiss franc versus euro, it's actually stronger than euro for quite a long time, and it was dollar stronger than euro. So in some way, Swiss franc is like, it's having own kind of way. It's not exactly as euro, and it's not exactly as dollar index or dollar. So for me, I just look right now, I see, to me, like this, looking at third chart, if it's on daily chart, if this one is hitting the moving average, for me it's actually it's a resistance. I would consider this too short. Below moving average on daily chart, if I would see certain, it makes like a small breakout to the top, I would consider it would go a little bit lower maybe, as soon as it will close a little bit below this, I might start to short. I am actually, for that one, I would be on the shorting side. When it comes to gold, gold was like, the gold was crazy. I was expecting to go the gold to go up. On the news, gold actually went down because if dollar index go up, if the dollar index go up, I expect gold to go down. Now it goes down, I expect gold to go up. So like, let me show you the chart for gold. Let me see. Okay, if I put XU no. Okay, this one. Okay, now what happened for the gold? So basically, I think it was like, let me see. This is daily. What if I change to hourly? Okay, let's change to like 30 days. No, 10 days. Okay, what? So what happened during the news? The gold was somewhere here, and many people were expecting probably to buy it, but then the dollar index went up and this went down. Now here I was watching very closely. Here it was like a crazy, somebody purchased a lot. So at this price, 1,400, 1 or 2 or 3 or 4, somewhere around 1,400, it was a huge purchase. So and it was so huge in one time. Let's see, like 30 minutes, let's say 5 days. I remember I was watching like in lifetime. It was like going down, and it jumped so up, and then went down. Somewhere here, I think it was like somebody purchased it, went up and then down, boom. So in one shot, and it moved so much. I don't remember, maybe here, somewhere here was a huge move. So the line was like the bar was like super long, and then kind of closed again. So the move from up and down was abnormal. Anyway, let's see, 2 days. Let me see. It was heating kind. I think this one. Oh yeah, it was somewhere like going from the bottom way up and then go back to the bottom. So now this is dollar, okay. No, this is gold. Okay, now looking at dollar index for gold, I'm finding actually it's kind of correlated too, because say like, this is daily. Let me put daily. Hold on, daily, and that was 6 months. Okay. So it was basically when, is it the same? Daily 6 months. Okay, so basically this one, after this dropping down, okay, this one went up, as I remember. It was up. It was a big move. Okay, this one there. Dollar index down. Now, if the dollar index move up, it was like a drop, and then it goes down and it go up. So I'm finding for myself it's very helpful to have this. I probably need to look at like 30 minutes or something. Oh, okay, let me see. Let's say 2 days. 30 minutes, and then 30 minutes, 2 days. So like this one. No, this is euro. Oh, let's see. Duplicate window. Okay, I put XYU. So now, so this one I see for myself better, 30 minutes. So dollar index go down, and gold is going up. It's not exactly every moment, but in general, I see certain kind of correlation. Now, if I look at, say, euro, okay, this dollar is 30 minutes, right? If I look at euro, 30 minutes, 2 days, okay, 2 days, okay, so see the dollar index go down, so euro goes up. So it's just my opinion, but to me actually it tells me something about, you know, some kind of cheat sheet. If I'm not sure about one, I can check some other one. Swiss franc is, I actually sometimes trade Swiss franc just based on technicals, because I don't see kind of big news, or even if there are news, I'm not finding it is moving Swiss franc. I think it's American news would move Swiss franc more than Swiss news or European news. So for me, I'm finding actually it's better just look at American news and trade Swiss franc than any other European news. Unless they're gonna cut rate or whatever, those banks do some kind of you know, those interventions and all that. Otherwise, to me, look, I can trade just based on technicals. And in fact, this one, looking at the daily chart, I might wait for retraction, or if it just go down more. But I still like to consider retraction or pull back, and I would enter on this just to, you know, it doesn't matter to me even if it's higher, just because it's below moving average. I'm always kind of on the side of if it's below moving average, I would be on the side of shorting. I'm not going to be on the side of buying. It's just my personal experience, and in the past I've seen if it's below moving average, it's very hard to come back. Some even people say moving average is actually resistance, so it can be quite a long time as resistance. It might not go above that. It might keep coming back to that and dropping back and coming back, dropping back. So for me, to buy something, yeah, I could buy, but Yeah, I can check dollar index. If dollar index is like super going, I might even buy some. But otherwise, I would just stay with. When it comes to Swiss franc, I might probably look at a lot of technicals, and I would compare probably to euro. Many times Swiss franc is going better than euro. When you look at euro and Swiss franc, actually euro is dropping. It means going down versus Swiss franc. So to me, Swiss franc is something stronger than euro for now. Now euro is expected rate cut in September, so I don't really believe euro investment right now is for a long time. If somebody want to buy euro, they probably want to wait till rate cut in September. But for short-term trading, euro might be very good because I honestly believe they do have a lot of tourism. I've seen statistics on tourism, and they do have a demand for euro. Many people exchange money to euros. Of course, if you live in eurozone, you don't need to exchange. But a lot of people, even in Europe, even those who live in Europe, does not mean they have euro as a currency. Many countries they still have own, like Norwegian money, or they have like, I think those northern countries. I don't accept Finland. I think Finland is euro, but many of those northern countries, they don't have euro. And there are some Eastern European people or African or any other people coming to Europe. They do exchange money to euros. So I think right now it's a season for traveling, for vacation, and I think euro. I don't really believe euro. It can be very weak right now because just on tourism, based on tourism, people do exchange money to euro. If it's cold season, boring, maybe I can expect tourism drops. So for now, I wouldn't really believe that euro will go down too much. I actually expect euro to go up right now based on dollar index, and I would, like I said, I would consider euro go up for some time. And franc too. Franc would be stronger. So that's my review. What I want to say about all this. Just because somebody announced something does not mean it's gonna happen immediately. And then there is another side, like bank management, bank decision making. If it's like for big volume, most likely they're not gonna jump immediately. They need to make a decision. They need to talk. They need to project whatever risk analysis and all that. So they might step in to exchange some part of their money to something else, but it's done with the time. It's not done immediately. And if you look at that big drop that happened, I actually was checking for volume, the dollar index. Okay, when that happened, euro in time of rate cut, the volume was not huge, so it's not really. I wouldn't say it's killed, or it basically someone took down by volume. The volume wasn't super huge. I wouldn't say that. So it was kind of, in some sense, small. So it was not really because of the volume it went down. It just somebody purchased something. I've heard stocks. What happened with that Powell? Powell said on one point they think his speech is kind of motivating, hawkish, But on the other side, what he said, the economy basically is slowing down and we have sales problems. If somebody is saying at the same time we have sales problems, There are many people are considering, oh, I don't need to buy stocks. How do you expect stocks to go up if he's saying we have problems with sales? So I've seen article and I guess information. They say at the same day stocks went down, and I actually assume many people might drop the stocks because the sales are not great. So if somebody is dropping stocks and sales are not great, and I look at S&P 500, it's going down so far. I don't see any huge improvement. So yeah, you can cut the rate, you can expect this and that, but if somebody is dropping the stocks, it will not go like they expect, because they announce bad sales and people don't want to buy stocks. Some close stocks, you know. Some people it's a bad news. Some people think great news, some people think bad news, you know. And I mean, if I have a company that main revenue comes from international sales, and he's saying we have problem with sales, and we have, like, you know, cannot sell, you know. So I would think, man, it means my company revenues not great, and it might turn out that net, instead of positive, becomes negative. I have net negative, I'm sure it will go down. So I might pull out all my money. I might close all my positions. Now I close all my positions, then they have sometimes reverse kind of way. If stocks go up, dollar go down. If dollar go down, stocks go up. They have that kind of relationship, right? Now at that time, if everybody dropped the stocks, there is no other way. Dollar went up instead of going down. So even if rate cut, it just went up just because of somebody you know, took money, a close position on stocks. Now, and if they want to cut the rate, I think the best way is just talking about the rate. Don't talk about sales, don't talk about anything else, because that's too much information. And he's not really a Wall Street guy, and he's not belonging to Dow Jones Industrial or S&P 500. It's not his business really. They have own specialists there, and I don't think he even supposed to go into that area of talking, because if he's belonging to the bank, just talk about your bank stuff, you know. If you're not belonging to Wall Street, it's just you know, no reason to announce anything kind of on behalf of whatever. Yeah, maybe but he's not news guy. News people should announce, not him, what he has to do with stocks and sales. So, and plus he's not economist. People say he's not economist, so economists should talk about that area, not really a banking guy. Banking guy, I know banking people, they don't really talk about what they don't want to talk about anything pretty much, because they're in the banking business. It's like information, you know, all that security, whatever. They don't want to talk about anything. They just talk to customer about his issues and nothing else, nothing external. I don't think Fed even supposed to even talk about all this economical stuff unless they have economists coming and talking, which is working for Federal Bank or something like that. I believe they're supposed to talk about rate cut, and they decided to make rate cut, and they need to tell people whatever they have numbers, targets. That's it. They don't need to even go into any other stuff, because they are not working for stocks and for sales, and they don't have turnover ratio. They don't have new orders, and they don't have accounting, they don't have anything to talk about this. Somebody asks them questions, they have no answer for it, because they are not even looking at accounting. I'm pretty much positive they don't look at accounting number of every company and all in general to talk about everything. Some actually report huge sales, some report bad sales, it depends. Not every company is reporting bad sales. So I wouldn't really personally would go to that, but if he's a banker, just talk about banking stuff. But the banking people, they usually not supposed to talk about too much about banking information because it's exposure and security and risk and all that, so they're not really into much talking. Now, looking back at index, dollar index. So my point is, I decided to make the second part. From my experience during announcement and during all those, movements, I would suggest to look at dollar index. If dollar index started to go up, don't try to short the dollar because I think it's a bad idea. I actually, I had like a certain roller coaster. I think I decided to. I wasn't home really. At that time they were cutting the rate, like in California it was like 11 o'clock or something. At that time I wasn't at home and I was outside, but I was playing with my phone. Keep buying, selling, keep buying, selling, buying, and actually I had to be at some point on the side of buying, but I don't have all this DXI dollar index on my phone. I just have it MT4 and nothing else. But I was trying to play risky kind of game, but actually not bad. I probably make like, but I have demo account like 100 grand, and I probably made like around 20 grand. No, altogether I made like 29 grand for the year, for the month. But let me see. Hold on. But I still have some position open. But it says, let me see, 20 grand. Let me show you. Let's see. Hold on. So on the bottom, just a second. On the bottom, it's like it says 29 grand profit. It was 100 grand and became 129. I have some positions open, but this one is it's just like a kind of a game, I don't even look at risk management, how much go down. I look at margin. Margin is, I still have a lot of dollars for margin. I just keep rolling. I don't have like set number, like small number. It was like kind of higher leverage. For me, it was the most important to make a right decision. For me, it was not important at that time to observe all those percentages of risk and all that. For me, I just keep looking, either buy or sell, either right decision or wrong decision. So I did observe, as long as I have like big amount of money for the margin. So that's how I was doing. I was buying lots, 1 lot, 2 lot, whatever. But during those news, it can jump up and down like this. But I think you need to keep in mind that sooner or later it will reach a certain point, and from that point, most likely it's gonna go based on technicals, because all that big noise will disappear. To me, right now, I've seen right after that it was NFP. NFP did not move. It's just completely dead. There is look like no news. Completely no news. NFP, it was like what, after 2 days, 3 days, whatever. It was not moving anywhere. So for me, I would say after the trade cut. Right now I'm looking basically at DXI, and I don't mind to buy euro. Even many people think it's a bad idea. I don't mind. I just need to see DXI, okay, approximately where support resistance. I would just play with euro within that support resistance pretty much. I'm not gonna shoot for huge gains, because DXI doesn't go from the ground to the moon. I just kind of look within those few bars up and down. And then what else? Swiss franc. In regards to Japanese yen, it was a huge move. I was surprised that no matter how strong the dollar was, it went down against Japanese yen. All currency, Canadian dollar, and everybody went down. Pretty much every currency went down against Japanese yen, but it's kind of getting very close to the bottom of it, so most likely pretty soon they're gonna go up against yen. And I've heard from those Japanese, all those information, news. They don't want yen to be very expensive, so they try to keep yen kind of not super overpriced. So it's not their interest really to make expensive yen, and they have different methods and all that. It's actually expected for yen to be cheaper, less price. So most likely all of those European or American currency will go up. That's what I want to say. That's part 2 about rate cut. If you did not catch something, you still have time. You can right now work, and you can use a lot of technicals and setups, and I think you'll be fine. Have a nice day. Bye. Cheerio.